Welcome, everyone, to the special Free Market Roadshow event. We have you today here digitally. My name is Kai Weiss. I'm a researcher at the Austrian Economics Center and a board member of the Friedrich August von Hayek Institute. And it's my great pleasure to talk today to Richard Rahn. Richard has undoubtedly been one of the most insightful and important voices advocating for free markets in the past decades. He is the chairman of Improbable Success Productions, the Institute for Global Economic Growth, and Metal Convertibility. He writes a syndicated weekly economic column, which is published in the Washington Times and Real Clear Markets and many other places, and has served for organizations like Cato Institute, Hudson Institute, and the Heritage Foundation. He was also previously the chief economist of the Chamber of Commerce and advisor for the Reagan and Bush senior administrations. And he is, I'm always proud to say, as a Hayek Institute board member, the 2018 Hayek Lifetime Achievement Award recipient. And the list of accomplishments could go on and on. Richard, welcome, and thanks for taking the time today.
Well, thank you so much. I appreciate you taking the time.
Great. Richard, this is, I think we agree, certainly a time of trouble and crisis. There was the COVID pandemic and all of the repercussions that have shown up since the Ukraine war, global warming, rampant inflation, to name just a few, and now also major economic troubles beyond that. Many analysts believe that a global economic crisis will soon be upon us, among other things because of unsustainable debt limits or government debt. Do you think the current levels of debt in the West has reached its tipping point, or can the current level of financial unrestraint be sustained over the long run?
Well, the problem is if you get debt up around 100% of GDP, the cost of servicing the debt really begins to rise rapidly, as it is now with the rise of interest rates. And I just had checked yesterday with the IMF, and the US debt GDP ratio was 115%. The UK is 102%. Japan's 221%. Italy's 146%. Well, Greece, of course, is a disaster in its own. That's 212%. France is about 100%. What this means is that you have the burden of interest rises. The U.S. interest payment will be about $400 billion this year. And at the current rates, it'll soon overtake defense spending as the biggest single component. So as the interest expenditure rises as part of the national budgets, then there's less and less money for all the pensions, defense, and all the other functions of government. And this thing just tends to spiral out of control. We've seen this happen in places like Argentina a number of times. And so there's not just one point where you tip over. It's sort of a gradual thing, and it just erodes, but it can accelerate. And since the lack of discipline here in the US and other countries to reduce government expenditures, I'm quite pessimistic given the current situation. And what happens is, in particular in the US, the value of the currency will be eroded because the Federal Reserve, being the lender of last resort, not only for the US, but for the whole world, will keep printing money to cover over all these deficits, which means the value of the currency, of course, will fall. So it's not a very cheerful outlook, and I'm sorry to give it such a pessimistic outlook this morning, but that's the way it is.
That does not sound good. I guess solving this crisis seems to be two ways. Either you increase taxes so that you make less debt and you can pay back that. So you increase taxes, which means that you might have too little tax revenue right now. Or you reduce government spending. So the current problem would be that there's too much government spending. Which one of the two is it?
Well, the problem with increasing taxes, we've known for almost ever, that there's a limit to how much you can tax and still increase revenue. And many years ago, I found a wonderful essay between Thomas Jefferson and the French economist J.B. Say, talking about what the optimal tax was on tariffs at that point, because they knew if they got too high, that people wouldn't pay them, they wouldn't trade, or typically black markets take over. That's true with every form of tax. Most governments now are already above their optimum level of taxation. And by that, I mean they're taxing more than they would actually get in additional revenue if they dropped the tax some, because the disincentives are so high. When you start taxing income up in a range of really more than 30%, but particularly when you get up in a range of 50, 60%, it brings in no additional tax revenue because people find legal and illegal ways to avoid paying the tax. That's particularly true like the capital gains tax. And President Biden wanted to double the capital gains tax rate. I just wrote an article pointing out this will actually reduce revenue, it won't increase revenue. And we've known this. I mean, we've known this for hundreds of years. So there's very little opportunity to increase taxes where you can increase revenue. You can increase tax rates and put on more taxes, but you're not going to get any more revenue. So you're really only left with the reduction in spending. Now, the dilemma the countries have gotten themselves in is they have the so-called entitlements, particularly pensions and spending on medical care for people. And as the populations get older, we're living a whole lot longer than we used to. And our whole pension schemes, the one in the US and most other countries, were predicated on we would not live very long and we'd have lots of children, breed rapidly and die early. Instead, we're no longer breeding and we're going to great ages. And particularly educated women tend to live up into their 90s. And so the pension systems, as they're designed, can't afford this. Yet we can't even tax more. And so ultimately, we're going to have to reduce the real value of those pensions. And it's either done through explicit reduction or through inflation. It's not going to be very pleasant over the next couple of decades. Now, this is somewhat offset by increases in productivity and the economy becoming more efficient in other ways. But the fiscal situation is not good, which leads you to bad monetary outcomes because the central bankers are forced to buy the government debt. And if they buy the additional government debt and there's no real goods and services to cover it, then you have more inflation. It's a downward spiral. And
is there, I guess, on those 2 points with the skyrocketing debt levels and then also with the entitlement problem where the pension systems don't seem particularly sustainable, as you just laid out. Is there a way out of that? Like, could the debt, I mean, a lot of politicians always talk about, we can balance the budget and then we can perhaps pay debt back or something like that. Is something like that ever possible? Or is it possible to actually make the pension system sustainable again? Or is it kind of, it's just going down?
If you got extremely high growth, now actually in the 1990s, we did it here in the US. We had a number of, starting off with the Reagan tax cuts, our economy accelerated, and we did a number of things correctly. It was both Reagan, Bush, and Clinton. And so growth accelerated, which means you had a surge in tax revenues, and they held down government spending. And we actually ran a few years of surplus. But even then, we did not deal with the long-term problem of the pension and medical payments reform. And everybody swept that off and said, well, we'll take care of it in the future. I was on the what called the Quadrennial Social Security Advisory Council for President Reagan back in 82 and 83. And we had written a report. We knew this was going to come in 25 years or so. Well, it's come. And this is finally, we've gotten to the point where you can't pass it down to the next group. They'll try over the next couple of years, but it's exactly sort of the doomsday scenarios here.
Yeah, there's no, I guess, particular blueprint on how to get out of that necessarily.
Well, we know what you have to do. you have to really reduce spending and get rid of a lot of unnecessary tax and regulatory impediments. But it has to be the political will. And the problem is the politician who said, oh, I'm going to reduce your pension, your Social Security or whatever. Immediately, everybody will scream, and all the news media will scream, this person is heartless and he's undeserving, and he ought to go to hell. And of course, he'll lose his job. And well, we see, as I speak to you, there's all these riots in France about increasing the retirement age. Well, anybody can do elementary arithmetic knows that Macron is right that you've got to increase the retirement age. There's no alternative. But there's riots in the streets and strikes and everything else of people trying to deny reality. And so we see what happens. Greece is a good example. What happens? Greek real income has dropped by more than 40% in the last 7 years. That's going to happen every place.
Oh, that's shocking. And I guess the question, there are a lot of voices like modern monetary theories like that, will basically just say, well, we can just print money endlessly and just keep things going. Why does that turning kind of to monetary policy? Why can't the central banks just continue doing what they've been doing the last few years and just keep the ship?
Yeah, but the problem is the central banks went down to zero interest rates, essentially. This was crazy. And so, I mean, I know places in Europe where you actually were paid to borrow money. People were getting payments because they had a mortgage. Of course, this makes no sense. And these zero interest rates, they tried to keep it down, but eventually, it was like a balloon, and they were trying to hold it down every place, but the bubble got out, and we started to have this big increase in inflation. And so the central bank has no alternative but to increase interest rates. Actually, to stop the inflation, you got to get interest rates equal to the level of inflation or slightly higher to stop the inflation. But you do that, and we're seeing what's happening right now as I speak to you. It causes a crisis among the banks because all these banks bought government bonds and very low interest rates. But as interest rates go up, the value of the bond falls, which means the bank's balance sheets get weaker and weaker. And it's again, sort of a death spiral. I wish I had the magic formula here. I've been warning about this stuff. I've been writing. I just did a book about 40 years of my columns, and I've been writing my current weekly column for 23 years, warning about all this. And it gives me no pleasure to say that I was right. I said this would happen, not just me, but hundreds of others or thousands of others of good economists have been saying, hey, you can't keep this up. And now we're finding you can't.
Yeah. Kind of as an alternative for what is happening right now, you've been a strong advocate of kind of Hayekian monetary policy, especially kind of a model of private competitive money. Why do you think sort of a Hayekian private competitive money regime would be better than government monopoly money?
Well, we go back, and the whole Austrian school of economics had warned about this, and Hayek, of course, had been the leading proponent in the last half of the last century. And as a young man, as a student, I started reading Hayek, and I read a lot of the great economists, and Hayek made the most sense to me. And then he did his book, Denationalization of Money, back in 1976. And the whole thing just logically, it's a fairly short book, 120 pages or so. And he lays it all out, exactly what will happen. Well, Hayek was right. He was right about a lot of things, like the end of communism and so forth. And fortunately, he lived a good long life to see that his predictions about communism were correct. But on the monetary side, he laid out why democracies, particularly with fiat monies without backing, once you got away from the gold standard, whatever, eventually would end up this, because people always like to vote themselves more benefits than they want to incur in cost. People vote against taxes and they vote for spending. Well, it's like in your own household. You know, if your wife and kids always want to spend more, I shouldn't say wives anymore, that's politically incorrect, I understand, but you know, the people in the family often want to spend more, and but they want to spend more than the income. And disciplined families know you've got to save. Undisciplined families engage in this deficit financing and run up bills on credit cards. And eventually there's a day where people say, we're not going to extend you any more debt. And then you have to live within your means. And it happens to families, it happens to companies, and it happens to countries. And Greece right now is a poster child of the Greeks are being forced to live much more within their means, which means a much lower standard of living. People don't like that, but the Greeks have no choice, so they endure it.
Right. And so what would a Hayekian competitive money system look like? And also, why should we, because a lot of people who are on our side, more on the Austrian economic side of things, free markets, they would maybe be like, oh, why not just return to the gold standard, or why not focus on cryptocurrencies or stuff like that?
Yeah.
Why is the
Well,
Hayekian system preferable? Or how would it actually work?
There's a lot of alternatives. I mean, the gold standard worked well in the last half of the 19th century. And the trouble in governments got sort of screwed up the gold system. And then in 1914, in the First World War, they basically got off the gold system because they needed to issue all the debt to pay for the war. And governments own about 20% of the gold. And so you don't have really a free market in gold. If you had a totally free market in gold and it wasn't regulated at all by governments, you could go back to the gold system. But then you would have probably a much higher price of gold. Hayek pointed out that probably having he thought a basket of commodities might be better, but have various types of competitive monies. I mean, he argued there was no more reason for a government to produce the money than for them to produce the chairs we're each sitting on. And he was, of course, right on that. And so I had read Hayek's book back in '76, and at the point, I was an advisor to one of the commodity exchanges, New York Mercantile Exchange, which is a big commodity exchange, and I tried to get them to adopt some of Hayek's ideas, and they thought I was a nutty young professor, and they paid no attention. In later years, unfortunately, I actually got to know Hayek and talked with him a little bit about it. Our problem of going just to a digital money, which I did a book in 1988 called The End of Money. I talked about movement towards private digital monies. But the problem was, how do you prevent counterfeiting? I used to be on the board of the Cayman Island Monetary Authority, which had its own currency board, produced its own money. And I actually oversaw the money production for the Cayman Islands for 6 years. And there we issued currency, paper currency, and ran a sort of a normal banking system, even though a number of us wanted to go to digital money, but we couldn't figure out how to prevent the counterfeiting if all the money was in the computer. Then those geniuses who came up with Bitcoin came up with the blockchain, and that was a really great innovation. The blockchain enables you to do digital transactions, not just money, but deeds or anything else, and to prevent counterfeiting. So suddenly all this became possible. And we've had all the experiments of various people doing various types of so-called cryptocurrencies and so forth. I'm old enough and had been a Hayekian to still believe you needed something real behind the money. So I started a company 3 years ago called this MCon, and we produce a digital token based on aluminum. And what we do is we acquire stocks of aluminum, we digitize them, and then sell the tokens, and people can trade the tokens, they can buy and sell. And it's because we have 100% aluminum behind it, it reflects the price of aluminum, which is, always will have real value. In a situation like we're in right now, where there's big inflation in fiat currencies, this looks pretty good. And we've got most of the bugs worked out. We're trying to expand the company, but others are doing various types of experiments, and we'll see which one works, or we may have a variety of these competitive currencies, as Hayek forecasts. But as government currencies become less respectable, and we'll take the US dollar, which is really the world's currency, people say, well, the dollar will crash, but it's got to crash against something. And if all the other currencies are tied to it, I mean, you can reduce the purchasing power of the dollar, but it's not going to crash relative to the euro or the yen. But as its value continues to fall, it's unreliable. Unlike the past, people will just naturally gravitate to other forms of money-like instruments. And there's a whole variety of monies out there. I mean, you have airline frequent flyer miles. Well, with these miles, you can trade them, you can buy goods and services in addition to airplane trips. It's a form of sort of a surrogate money. And we'll see a lot of this stuff happening as people continue to lose faith in government monies.
So there is some hope, actually.
Well, I tend to be a long-term optimist.
Good.
and part of it is people work around incompetent and corrupt governments. It's often inefficient. But I had worked a lot in Eastern Europe and the former Soviet Union during the transition. I co-chaired the Bulgarian transition program. I worked in Hungary and Estonia and in Russia itself. I spent a lot of time in Russia. And I watched how people managed around totally incompetent governments. And I've been in countries where you had basically hyperinflation. Currency collapse, what do people do? Well, most people don't go out and starve to death. They find other things to do. They use back then in Bulgaria, it was common to use like the D-mark. That's before the euro. Or people use all kinds of foreign currencies or other goods and services to serve as money. In World War II, in the prison camps, people actually used cigarettes as a form of currency in the prison camps. So people will find ways to deal with it. These days, it's easier with the electronic age to develop alternatives. And some people will get into things like Bitcoin, others into gold, or in our case, aluminum-backed currencies. And I can make the long argument why I think aluminum is better. But people will cope and things will change. And the current government structures with these, as I said, the pension programs and the healthcare programs, they have to be reformed. And they'll be reformed whether the politicians want to or not, because they begin to collapse in their own weight, and it forces reform. And we've seen that in countries all around the world. One of the great ironies is the Eastern European countries are in much better shape than are the Western countries, because at the end of the communist era, the Eastern European countries had no debt because the hyperinflation had erased the value of their debt, their old currencies. So by starting over again, they started off basically debt-free, and they have very low levels of debt. And of course, these countries proceeded on. You didn't have mass starvation and so forth. And you were asking before about, well, what happens? Well, we sort of go back. We saw the examples in Eastern Europe and other places around the world. The existing monetary order collapses. real incomes fall the way they have in Greece, things come back to a new equilibrium. Hopefully, next time around, countries will be wiser and just turn over the whole money thing to the private sector and realize that governments aren't competent to do this, and things will be better. But it's a painful transition.
I guess it seems you've been mentioning a couple of times that countries have to learn to somewhat live within their means. Is there still hope to have something like in the 90s, what you mentioned, where you have so much growth that it can kind of compensate for all the fiscal policies of the past? Or is there a sense that we have to live with less over the next few years or decades?
We could have, with the correct set of policies, and we could have very high growth again. There's no actual limits to growth here. Even though people like to say there's limits to growth, there really aren't, provided you have the right set of incentives and so forth. Now, that would take really courageous political leadership and a willingness of majority of the population to endure a few years of lower standards of living. But the adjustment can take place relatively quickly. And I mean, we're not talking about having to live in poverty for decades. We're talking about a 40% or so drop in the standard of living, and if you do things correctly, for 4 or 5 years, which is painful, but it's not the end of the world. And that's actually the kind of standard of living we all had maybe 30 years ago anyway. So it's not, with the Western countries, because they were well above the poverty levels, they should be able to endure it. If you're right at poverty, if you're a very marginal country, a 40% drop in income is truly disastrous, because that does mean starvation and real deprivation.
Yeah. As a final point, one of your main contributions to economic theory is the idea that there's an optimum size of government, which is kind of illustrated by the Rahn curve. So when looking at today's size of governments, what is the optimal size of government? I suspect it's probably currently too large, too extensive. But is it, do we have to, I suppose, decrease the role that government plays? Is that the same for all governments, or is there some kind of variation there?
Well, first of all, there's a big variation about the optimum size of government, depending on the type of government and a lot of the cultural background and so forth. Indications are that once government gets more than about 25% of GDP, economic growth tends to slow. You have places like Singapore, Taiwan, and others that have governments down around that size or lower. And they, of course, had very high growth rates and done very well, and still provide all the basic essential services. Once government spending gets up more than 40% or so, growth really does slow, and you get up around 50%. For most places, it just plain stops. Now, there's black markets and other things that go on. But when I was looking at this work, I originally did the work in the 1980s, and we didn't have as much data back then as we do now. And so my original arguments have been replicated by many others and updated, and we have many studies over the years to illustrate the point. But I found something interesting in Europe. Now, Switzerland is a very heterogeneous country, different languages, different religions, and so forth. And it seems that their optimum size government is lower in Switzerland than it is in Scandinavia, where you have very homogeneous cultures. And I take Finland, can probably endure the biggest government sector of any country in the world. Why? Because Finland is extremely homogeneous, much more so than either Sweden or Norway or Denmark and so forth. And I spent a lot of time in Finland. And I noticed the place operates like a club. You go into a government office and people say, "Oh, how's cousin Olaf doing?" Everybody knows everybody else. And there's a social pressure for government bureaucrats to actually perform, unlike what we have in the US and elsewhere. And it's more like an extended family. And the Finns seem to be able to endure a higher level of government without really hurting economic growth. I think their government is too big for it's higher than optimum, but it's an arrangement where they live perfectly well. And they're up around 50% of GDP. Now, the Swiss could not live with a government that big without really depressing economic growth. Swiss roughly a third of GDP, and they're probably better off if they could bring it down to 25% or so, or under. A big heterogeneous country like the US needs much lower levels of particularly central government spending. But we see in the US these differences, and we have a wonderful economic social experiment going on right now in our country. We have two states, Florida and New York. Florida had been smaller in population than New York up to about 5 years ago. Now Florida has about 3 million people more than New York. You've had a great gravitation of high income people out of New York into Florida. Why? Florida has no state or local income taxes. It is a very well managed state with very little corruption. And so if you measure governmental outcomes, school systems, crime, infrastructure, Florida wins on all accounts. And now Florida has even a bigger population. But one statistic, the state Florida budget is less than half that of New York, even though Florida's got a bigger population. Florida has no income tax, but Florida runs a budget surplus. New York's got these big budget deficits. And you see the whole difference because government is smaller and better in Florida, and it's bigger and worse in New York. And this is true with the whole world. And I mean, you take places again, like, well, Singapore is almost too small, but places like Taiwan and so forth have managed a very efficient government. And the Taiwanese example I love because in 1949, when the communists took over in China, Taiwan and mainland China were equally poor. And the mainland, of course, embraced communism, and people talk about the great economic miracle. But right next door, there was even a greater economic miracle because the Taiwanese have had capitalism all the way along. They don't have the kind of government control of the financial sector that the mainland Chinese have. Same people, same climate, but one chose one type of government and the other chose another. And we have these contrasts all over the world. And we can see that even the differences in Europe of some countries. Again, Switzerland is always a great example for good government. It's well managed. And next door, the Italians, basically the same people, have done far less well.
Right. Yeah. So again, in that sense, then, as one final question, it seems like there are ways to get out of this mess. There are difficult decisions that need to be made, good policies that need to be implemented. But as you've noted, those policies tend to be rather unpopular among voters, among politicians, in which everything is kind of populist. I can just throw money around, give you this and that. How can we, what you just presented, how can we communicate this? How can we advance these ideas in a world that seems to not particularly be in favor of these ideas?
Well, by doing what we're doing right now, and that is, of course, bringing up the evidence for all those of us who write and speak and work on this. I think we make a contribution. And of course, the Austrian Economic Center and the Hayek Institute, the kind of work you do, that's necessary because you got to have enough people to begin to understand it. But as things get worse, more and more people, the light bulb goes on their head and say, what is this? And in the US right now, I find it very interesting. We have this Florida, New York experiment going on, and the opinions are really shifting. The Democrat Party, which was the big government party, has been destroyed in Florida. I mean, it just is, Florida did this rapid shift to the Republicans. And the Democrats believed, oh, the Hispanics and so forth, these people coming from Latin America, would all vote Democrat. They wanted welfare benefits. No, they turned around and voted Republicans because there was enough common sense there. People say, hey, these other guys want to tax and regulate me and spend me to death. And we know that doesn't work. And a lot of them came from countries like Cuba and elsewhere where they'd seen socialism or the corrupt or welfare states. And said, no. And so we're seeing a shift in the US. Will go region by region because we're so big. But in other places around the world, it was interesting. The Swedes in the 1960s, Sweden had been a very successful economy all during the 20th century. In the 1960s, they decided to really try to build more of the welfare state, and socialism became fashionable. By the 1990s, this was obviously a disaster to the Swedes. Their relative income in Europe was falling. Things weren't working. So the Swedes switched course. They still have a pretty big government, still have much of a welfare state, but they got rid of most of the socialism. It's a very free market country in a lot of ways. And it became sensible. People say, they wake up and say, hey, enough is enough. And we're not going to continue with this. And the struggle goes on forever. There are no permanent victories and there's no permanent defeats. And even at the worst of times, the people get down. And I say, well, we got to get out there. We got to communicate. We got to fight for our ideas because they're right. And you look at, again, you point out the predictions of Hayek versus the prediction of Keynes and the Marxists and things. Our team over the long run, I think, will prevail in most places. And of course, you always need a few islands of communism and socialism. The old line, nobody's totally useless. They can always serve as a bad example. That's true with countries also.
Nice. So I guess we started with a lot of doom and gloom, justifiably so. And then now we've ended kind of with some kind of optimism. There is hope. And thanks.
There is always hope.
Yeah.
And there are ways out. Now, that doesn't mean they're totally painless and that you don't have to endure a little bit. Like with your own bodies, you know, if you want a big, strong body, you have to endure the pain of, you know, going out there and exercising, which may not be fun, but it can have results, and there's never too late.
Great. Yeah. That's a good rallying cry. And I think we can take this with us. Thanks so much for taking the time, Richard. And
well, I greatly appreciate everything that you all do and the work you're doing, and it's important. And you may not see the results today or tomorrow, but over the long run, enough people see the stuff that you do, and it switches on these little light bulbs. And so when things get back, to say, no, that was a bad idea. We got to switch from that. And there's ways to succeed. And we have success stories all around the world. It's not that we're talking about some Alice in Wonderland thing.
Yeah,
we do know what works. And then, well, I mean, Austria works well, but right next door, Switzerland, the Swiss have been a very good example for the rest of the world.
Yeah. Well, we appreciate these positive words, and then we have to kind of bring those light bulbs into the minds of people. So thanks again, and thanks everyone who listened in today. If you want to stay updated what the Free Market Roadshow and the Austrian Economic Center are doing, check us out online, follow us. And so wish everyone a good day and a good continuing fight for freedom in the next few years. As Richard showed, there is always hope. And so I think we can continue fighting for the ideas that we cherish. Thanks again.
Okay, thank you.